I'm going to talk about open banking and regulation. It's basically the role of PSD2 and some of the other regulations which are helping to shape banking. So we're going to briefly cover what the drivers are for open banking, why it's happening, the regulation that's involved in this, what PSD2 means for open banking, the role of strong customer authentication, and the threats, opportunities, and implications of all of this. So, what are the drivers for open banking? What is bringing this about? Some of these drivers are done on a national level or at the EU level. The regulators are looking to bring more competition into the banking space. They want more diversity of supply. They're looking at people to provide products and services to the underbanked or underserved in the banking space. We've also got to consider the way consumers operate now in the digital age. Their expectations of how they consume services have changed, and banks have to adapt to look at how we consume financial services. And this is all about data. This is about using APIs to enable data services to provide better levels of service to the end consumer. And one other point, desire to bring about an alternative to the card schemes. So, PSD2. PSD2 mandates open banking. It's no longer something that the banks can think about doing on their own. Under PSD2, banks have to provide open banking. They have to provide APIs. So, as with all regulation, there's a whole new pile of acronyms which come into play. ASPSP, that's a bank to you and me. Account servicing, payment service provider. So banks have to provide access to account. They must provide these services. And they provide these services to third-party PSPs. Now, these third-party PSPs who are going to access the accounts, they could be looking at it to initiate payments, in which case become a payment initiating service provider. They could be doing to provide account information services to help you find the best credit card for you or the best mortgage for you, or just to display your financial information in a more useful way and a more useful method for you. And confirmation of availability of funds. If you're going to take a payment from someone, you can send this in and check that the funds are actually available to make that payment happen. Now, another important piece of legislation coming along is GDPR. Now, this comes into effect 25th of May 2018, and it somehow it conflicts in quite a few places with PSD2. We'll touch on that a little bit later when we come back to that, but the conflict between GDPR and PSD2 is quite important and needs to be thought about. So, what's the relationship between PSD2 and open banking? How does it come about? The Dutch Payments Association have come up with this a 4-tier model, which I think provides a level of clarity on these relationships and how these layers. So I'd like to share that with you. So at level 1, tier 1 in this model, we have PSD2 itself. So this is the directive which tells you what you have to do. Now, at level 2, we have RTS, the Regulatory Technical Standards. Within PSD2, there was 11 mandates put upon the EBA. And those mandates are looking at how strong customer authentication and common and secure communications takes place. And this is quite an important step within the legislation. Level 3, we have the multi-stakeholder groups. Now, these are bodies that are looking to bring about standardization. As we spoke about earlier on the panel session, there is no standardization in the APIs. So bodies are coming together to create a level of standards within the industry. And that takes us to level 4, where we actually have the market solutions, the APIs, that the banks are actually going to provide for the provision of these services. It's a nice model, and it helps you understand the APIs and PSD2s and the levels and the intermediaries between them. So let's consider why these multi-stakeholder groups are seeking to bring consolidation within the APIs. Under PSD2, the banks must provide a set of APIs. It doesn't say what the APIs are in terms of form, but they must provide a set of APIs. So, for a consumer, they will interact with their bank through their mobile banking app or their internet banking. They may have interact with another financial institution, maybe they get a credit card or something like that. But the consumer will interact with multiple trusted third-party providers, AISPs or PISPs. Those AISPs and PISPs, in order to provide financial services, they need to interact with all of the APIs, or as many as the APIs they think they need to be able to provide these services. If they only interact with one or two, then there's a restriction on how they can operate and where they can operate within this space. So what's that like to bring about? What we're likely to see are what we consider clusters of APIs. So in the UK, there's a working group looking to bring about the open banking working group in the UK. We can probably see a Dutch API, the Berlin group. So all of these third-party, all of these level 3 entities are going to bring about clusters of APIs. The banks don't have to join with them. They may decide to opt out. It depends really on what's within the bank's interest within this space. But one thing to bear in mind, there is no common European API. Okay, there's a big gap in the middle here. Now, perhaps we'll address this in PSD3, or perhaps there's scope here for a hub or a scheme to provide the levels of interoperability and interaction that are required to provide an open working payments network. Strong customer authentication, this is absolutely essential to the providing of open banking, and it's central to how it all works. If you think about a transaction in a PSD world and an open banking world, it seems fairly straightforward. We have the customers who are interacting with the TPP. They are contacting the bank, and then the bank is obtaining strong customer authentication and the service is provided. Now that all sounds great, but how does that actually work? The bank doesn't have a relationship with the AISP who's trying to access your account. So how does the bank know that that AISP is actually allowed to obtain the services that have been asked for over the APIs? This is where the local regulators come in. The local regulators have to create a register, and the AISPs and the PISPs have to be regulated at a local level, and then they're given certificates. The bank trusts the certificate, not the AISP, PISP. So when a certificate is presented along with a request for data, the bank knows that this is a genuine party and they can provide that data. But the bank has to protect themselves, and they have to authenticate the cardholder. And they do this through two-factor authentication. This is where the bank is going to release funds or release information or data about the accounts it holds. So doing two-factor authentication, strong customer authentication properly is essential to being able to provide an open banking service. Two-factor authentication, it's two of three things: knowledge, possession, inheritance. Something I know, something I have, something I am. Banks need to think about how they provide these services, and they need to do it well, because a poor customer experience will stop people using things for the second time. And so we may actually see people actually move into where we get a slick experience. So banks need to think really quite hard about how they're going to offer strong customer authentication. The ESPSPs, as I mentioned, they're identified through use of qualified certificates. Under PSD2, it suggests this is under eIDAS, which doesn't exist, so good luck. And they must also provide explicit within their RTS about the need to provide strong customer authentication, but they are quite limited. So these to allow contactless payments, so payments on less than 50 euros, unattended terminals for parking, road tolls, and remote payments for under 30 euros are exempt. But under these exemptions, there's also a cumulative count, which then enforces the need for strong customer authentication. So even when there's an exemption, the strong customer authentication need comes back in. Now, this is quite controversial because a lot of enterprises are saying, well, today we use a lot of risk-based authentication to protect our payments. And so this has been brought in within the draft RTS, the transaction risk assessment. However, transaction risk assessment can only be performed if reference fraud rates are met. So institutions have to prove that they meet these reference fraud rates, and these reference fraud rates are really quite severe. To give you an example, in the UK last year, CNP fraud was running about 0.14%. So based on that, some institutions would be able to meet transaction risk assessment, some wouldn't. None of the banks that we're talking to are going down the transaction risk assessment route at the moment. Everyone is following down strong customer authentication. Perhaps over time, when the risk and fraud levels are better understood and the ways in which transaction risk assessment can work, we may see this coming in the future down the line. But I would suggest that it's seen as a secondary approach to protecting the accounts that are held. You ought to bear in mind that what PSD2 is seeking to do is to keep the fraud levels low. Fraud is quite an important factor. To have an efficient transaction system, you have to have confidence in that system, and combating fraud is a central part of that. So, spoke a bit about conflict between PSD2 and GDPR. So I'll just explain a bit more about what that actually means. PSD2 provides data services through the open banking through the APIs, whereas GDPR sets out to protect an individual's data. So if we consider the transaction again, we have the customers, they talk to the AISP and say, show me my data or provide me the services that I need. They talk to the bank authenticates the customer, and so the bank provides the data to the AISP, or the statement that provides the access to the account. So what can be contained within that data? If we think about it, we have a salary, utility bills, payments that I made to Bob, fees that I paid for my account, my mortgage payments, payments that I've made to Alice, my credit card fees, and how much I spend at my supermarket. Now, some of this data you can see as being legitimate for the AISP to provide the services and recommend the financial products which will help provide me with a better service and a better way of dealing with my financial needs. However, you can only access data for the designated purpose for which it's used. And bear in mind that GDPR protects the individual's right, and you need explicit consent. Now, I may have given the AISP permission to read my statement and to know what the transactions are, but Alice and Bob haven't. And so the data which is passed from the banks to the AISPs has to be redacted in some way. So this was an important role for the banks. The banks become the custodians of data and the custodians of privacy. And so as well as having to open up the accounts through PSD2, they also have to protect the individual's rights under GDPR. And that's quite a conflict. The bank needs to know that that's a payment to a person, and that's not allowed to go through the AISP. So, to finish off, what are the opportunities and threats within PSD2? The threats obviously come from the tech titans. No one really knows what Google, Amazon, Apple are going to do once these APIs become available and how they're going to actually start using them. But use them they will. The challenger banks and the fintechs, they're going to get access to all that lovely data that the banks have and provide all these wonderful financial services in a targeted way at the bank's customers. So what can the bank do about it? The bank needs to think about its strategy. Someone was saying earlier, I think it was Monica, that there's a way for the banks to think about their operating models and their financial models and how they go about this. Has to change to a customer-centric way of thinking, not an account-centric way of thinking. Think about the customer, what the customer wants, and the services that the customer needs. Think about whether you can provide those services yourselves or whether you need to partner with other fintech companies to enable those services and create the APIs and partnerships to allow that to happen. The panel earlier was talking about identity. With strong customer authentication and the information that the banks have, the banks are very well positioned to provide identity services. And this is something to be thinking about and consider. And partner or buy the fintechs, which will help provide all of this. And finally, there's no reason why an ASPSP has to be just an ASPSP. They could be the AISP, they could be the PISP. Thank you.